Too many order blocks, too many fair value gaps, too many breaker blocks, simply too many ICT concepts. You are focused on too many things, and I was too. Now I trade one type of candle which has consistently made me 5 figures from prop firms, like it's nothing. Stick around, and today we finally cut through the nonsense in the ICT space, and I'll teach you how to make money by trading this one type of candle. So, what I am talking about is an expansion candle. You may have heard me speak about this before, but in this video, I'm transforming it. I'm giving you a 5-minute time frame based model to finally pull some money out of these prop firms. Yes, we will be using one daily candle with this model. So without wasting any time, let's get straight into this. So why have I called it LozTradez one candle theory? Because as usual, this is a theme on my channel now. We are using one candle to frame context, and then we're dropping to a 1 hour time frame and a 5-minute time frame for entry. We take one candle, so the very first thing is that we need a range. We need a range. What we do here is take a daily candle. Which daily candles? The smaller range daily candles. You can see here, in this previous 3 days, which day is the smallest? Quite obviously this one, right? You can see we use this candle as a range because small ranges lead to expansions, as consolidations lead to expansions, okay? A small range candle is by definition a consolidation. So when we have this, we can now use this range for framework. Now this model has pulled me 5 figures out of prop firms, okay? Trading this one model, it is so powerful as long as you are trading the correct range, okay? So that is the very first thing we need to get down. This small range leads to this large range, okay? And that is the basis of my theory. Small ranges lead to large ranges, and large ranges lead to small ranges, okay? So let's dive into the hourly chart now and look at this range and how we can use it. If we drop down, you can see that this is that daily candles low, Wednesday the 7th of August, okay? We then have Wednesday the 7th of August again, the high of this candle. What we are looking for is a side of this range to be taken out. We need one side of this range to be taken out because we need liquidity in the market. Liquidity is induced once we take out the previous day high. Okay, you can see the day closed, Wednesday closed close to this high. So it is likely that we take the previous day high rather than coming all the way down here, taking the low and then going back to the high. Is it more likely we just take the high and then drop? Of course it is. So once we take a high, what are we looking for? What are the rules to this model after you've found a range to use? Well, we need an hourly candle to close inside the previous candle. Look what we do here. We sweep buy side liquidity and close inside this candle's body. That's what we need. This confirms to us that we are probably on side, okay? What we do now is we drop down to a 5-minute time frame to find an entry. This is the trick, okay? Because we've outlined a small range. We've taken one side of the range, and because small ranges lead to expansion, we are now expecting expansion. How do we position ourselves? Drop to the 5-minute. Okay, let's dive into here. And what are we looking for now? Run a 5-minute. You can see this is the high of the previous candle. This is where it swept. Okay, so we've closed inside of it. A new candle opens up, a new hourly candle. What we are looking for now is a change in the state of delivery. A change in the state of delivery confirms to us that we are going lower. It gives us extra confirmation and at the same time allows us to get involved in the market. So what is a change in the state of delivery? For those who don't know, it is an order block. An order block is the last consecutive up close candles before the down move. So once we close below these up close candles, now we use this area as our order block. And that's exactly what I'm waiting for. So once this candle opens up, we are looking for up close candles to be traded through and closed below, okay? So once they are finally closed below, we take this as our range. This red box becomes our order block. You are selling from here. That is a sell. Now, you might be asking, Loz, where can I put my stop loss? Well, there's a few places you can place a stop loss here. Once we close below and trade back into it, you would take an entry, okay, down here. You would take an entry about there. You can place your stop loss above this high of the order block. That's an aggressive stop loss. Or we can have a conservative stop loss, which I prefer. You can put it above the high that is just above the order block. You can see this gives us a lot more room. We are trading Forex as well. So a 7 pip stop loss on Forex is still tight, but is nowhere near as tight as a 5 pip stop loss. You can get slipped by prop firms really easily if you have a tight 5 pip stop loss. So I widen it a bit more and gives us 7.5 pip. Okay, now where can we aim for? If we go back to the range, remember, small ranges breed large ranges. We've taken out the high of this range. So again, once you come to me and ask what we aim for, I tell you the range. The range low, okay? Look at this. Remember the framework? Remember the logic? We need a small range, and then small ranges breed large ranges. This is what my theory is built on. This is what I've been working on for a few years now, determining how we catch these large moves, okay? Because everyone wants to be inside these large moves. No one wants small, lethargical moves. We want to find the biggest moves possible and with the most volatility. I have figured this out with small ranges leading to large ones and large ones leading to small ones. So once we get a change in the state of delivery here, and we've swept the candle high on the hourly chart, we now take an easy 1 to 4 once we've got the change in the state of delivery. Do you see how easy this can be? Okay, what I have developed here is simply using a small daily candle to predict a large one. And we are positioning ourselves in the large candle with the hourly and the 5-minute time frame. Let's dive into another example of this so you can really get it down. So what exactly are we looking for again? Think about this. We are looking for a small range, okay? Does this candle look small to you compared to this candle? Yes, right? Now, we have a range. Remember, we have a range. We take the range high and we take the range low. Now, what time frame do we drop down to? The 1 hour time frame. What are we waiting for on this time frame? Remember, we are waiting for the range high or the range low to get raided. Dropping onto the hourly, you can see our range is clearly defined. Now, why is this also a range? This is also a range because we swept sell side, we swept buy side. Okay, which buy side and which sell side? The sell stops below here and the buy stops above here. Really simple stuff. So sweeping buy side and sweeping sell side both give us a range. And ranges breed expansion, especially if that range is small. So what do we wait for? Remember the rules of this. We simply wait for the range high or the range low to get taken. Here you can see the range high gets taken. What does the previous candle do? Ideally, we want it to close inside the body. It doesn't, but as long as it closes inside the full candle, okay, the full candle being here, this full candle, okay, all through here, as long as this closes inside this red box, this range we are set up for expansion. And that's exactly what we're looking for, okay? Now, what do we need? A 5-minute change in the state of delivery. Do you see how this is really simple? It's not complicated like other ICT concepts. It's not complicated like other mentors on YouTube are telling you. This can be really simple. Close inside the previous candle. Now we drop to the 5-minute, okay? Zooming into the 5-minute time frame. Remember, we have our range. Range high, range low down here. Previous hourly candle swept, okay? 8 o'clock candle high, 9 o'clock high. 9 o'clock sweeps, closes inside. What are we waiting for? Change in the state of delivery, because the algorithm needs to seek the other side of the range now. We've seeked the range high. We now need to seek the range low. Look at what happens here. We sweep the candle. down close candle closes below this up close candle. Yes, that is your order block. Technically, this is your order block, but I'll give you the benefit of the doubt. Why? Because it's a small body. We prefer big bodies for order blocks. We want the big chunky order blocks rather than the small body ones, okay? So let's say you missed that. You didn't think that's a valid entry, and I can see why, okay? So now we want to look for a down close candle to close below an up close candle that has a large body. Take a look at this. This body is large enough for me, okay? Yes, I am using intuition, but also this candle rebalanced this imbalance. So once we trade below it, now this confirms to me with a lot of conviction that we are to go lower for the other side of the range. We close below it, and then where does this candle wick into? The up close candle's body. As simple as that. So let's go over the logic again. Okay, what have we had? A range, a small daily candle, creating our range. We take out the buy side of the range. We then have an hourly candle which closes inside the previous hourly candle. And then we get a 5-minute change in the state of delivery. And look how easy this delivers downside. Look how easy sell side is delivered now. Sell side below here, but what is our final target? After a bit of consolidation, where do we finally drop to? The other side of the range. If we go back to the daily chart, small daily candle, candle high, candle low. After the 5-minute change in the state of delivery, what do we aim for? The previous daily candle low. Okay, small ranges lead to large ranges. Is this a large range? Yes. Can you catch this move? Yes. I've just outlined to you how exactly we do this. If you were to take a sell here and have a conservative stop loss like I spoke about of 7 pips, we would aim for a 1 to 6, okay? If you held to the previous daily candle low, because we have a range here, remember, we have a range. If you aim for this, you would have a 1 to 6. If you were on a phase 2 of a prop firm challenge, this would pass it, okay? This one strategy would pass that challenge. You may be thinking, Loz, how can I use this on different pairs? Let me show you exactly how we do this, because it's the exact same thing, okay? Let's head over to the NQ chart here, okay? Remember, we are looking for a small range, because small ranges breed large ranges. You take a look here. In this bit of price action, for example, this is a small candle. Yes. Why is it a small candle? Because we've had 3 large candles, okay? Not counting that one. Let's say 2 large candles. 2 large candles, and then this one is an inside day. What is an inside day? We don't take previous day high, and we don't take previous day low. An inside day naturally is a smaller range, okay? Smaller ranges, I'm not even going to say it again, okay? You know what smaller ranges lead to. Range high, range low, okay? You can even aim for the external liquidity down here, which will add as another target. Why can you aim for that in this scenario? Bearish, okay? We have a long-term target down here. So any external liquidity should also be run out. But instead, let's focus on this candle's range. As per the rules, we drop down to the 1 hour time frame, okay? What are we waiting for? We're waiting for a previous candle to close inside the last one, okay? Look what we have here. We have the range high, the range low. Let's incorporate the idea of key times. What is a key time for the Nasdaq? Okay, usually, now sometimes it can, but usually the Nasdaq doesn't move much during London. There are specific things you can look for that will tip its hand to you when it's going to move during London, but usually it doesn't. Euro USD does. So the examples I was showing you before, we are just looking for a very simple close inside the last one. But here, we can look for a key time. Incorporate a key time to make this even more high probability. What do I exactly mean by this? Well, this candle is swept, yes, and we start to close inside the previous candle. At what time? 2 a.m., the start of London session. You may get caught on this, and you may even catch a move on this, but we're not going to go for this low yet. Why? Because unlike EU, the Nasdaq doesn't move during London session often, okay? Its largest ranges are during the New York session. That's when the volatility comes in. So what do we wait for? We wait for the false move to get swept, okay? So this is our candle range high, yes, but this is the false breakout because it didn't happen at a key time for this pair. It's relative to the pair, remember that. So what are we waiting for now? The high to get swept. At what time? 9 a.m. 9 a.m. New York time. 10 a.m. sweeps the previous candle high. Where does it close? Inside the wick of this. It can close below it, which is absolutely fine. That's an even stronger move down, okay? But we wouldn't be anticipating this. So, previous candle high swept, we close inside of it, okay? Inside this range. Now we are set up for the conditions to expand. We are set up for my candle theory to expand. Yes, this ties into expansion theory. So what are we waiting for now? The 5-minute change in the state of delivery. Where does this happen? Here, okay? Previous candle high, 9:45. 10 a.m., we sweep the high. And now we get the change in the state of delivery. Up close candle before sweeping the high, close below it. This should hold now. This whole candle becomes your order block. Every time we tap into it, that's a sell. Come down. What are you aiming for? You may have taken a partial here. Now I'm going to drop some source again. Okay. Why would you take a partial here? Because take the range low to the range high. Okay. Is this below here discount? Of course it is. Okay. Small ranges are also dealing ranges. Remember, we want to be sellers in a premium, buyers in a discount. Okay. This range here, look when we sweep the candles high, where do we go to? A discount. As soon as we hit equilibrium, you should partial. Even if it's 20%, even if it's 30%, okay, just partial. It is crucial that you partial because this will scare a lot of you out. If you haven't been trading my theory for very long, this will scare you out, okay, quite simply. I have been trading this for a long time now. I know that this retracement is only coming to collect more orders. We are also collecting more buy orders here. We're tricking retail into thinking this is going higher, when in reality we're mitigating the order block again. Look how sensitive it is. We touched it twice and ran away. We come back up only because we hit a short-term discount. We come back up and remitigate it and drop again. Fair value gap. That's another sell. Rally up. OTE. High, low. OTE level. Sell. Fair value gap. Sell. What we aiming for? Look what happens once again, by the way. Come into a discount. This is why I told you all to partial. Come into a discount. Okay? Partial. All throughout these sells, you're partial in here because we hit a discount level. Okay? This is our range. Don't forget that. You can split the range into two as you can with anything else. Okay? Because small ranges lead to larger ranges. So when we come into a discount of that smaller range, you need to partial because this can happen. Again, do we break the high? No. Do we just tap the order block, the high probability order block, and rally away again? Yes. This time, by the way, Tuesday, what time? 9:50 a.m. Smack bang in the middle of New York session. The key time I just told you about. The key time we're expecting an expansion. The same order block. Tapped it once, that's a sell, partial. Tapped it again, sell, partial. Tapped it a third time, now we run. What do we run for? The range low, okay? All from that one tiny daily candle, okay? Look how many moves you can catch here. You can take full profit now at the range low. It is that simple, guys. That is all I'm trying to teach you. This is truly all you need, and I'm not just saying that. You just need to find a small range. All of that framework inside here came from aiming for this low. And we have the external sell side liquidity. Don't forget about that. But this candle, if I remove all of this, all of those opportunities on the order block came from trading this candle. Okay? Came from anticipating expansion because this candle was small. Okay? Why did we know that candle was going to be small again? Large range, large range. Large ranges lead to small ranges. Small ranges lead to large ranges. This is the theory that you need. You need to adopt this thinking when you're trading ICT. Okay? We only need a small candle, and then we breed a large candle. Remember the order block. The high probability order block. Okay? Range high, range low. All from this one order block. Remember, this order block was a high probability one because this candle, okay, swept this one at a key time and closed inside of it. That's all we're looking for. Go over the rules again. Small daily candle leads to a large one. So we're anticipating that large one. You can reverse all of this whole video, for a buy side example, by the way. Okay, of course this works for bullish candles. Just reverse the whole video. You're looking for the exact same thing. Now you're looking for a purge on sell side liquidity on the hourly time frame. Then we wait for an hourly candle at a key time to close inside the previous hourly candle. Drop down to a 5-minute time frame, and we are looking for that change in the state of delivery. That change in the state of delivery confirms everything we're looking for. Okay? That confirms that the expansion is going to happen at this time. At the time you're anticipating it to happen, the key time I gave you for indices, for example, okay, the key time for the Nasdaq, this change in the state of delivery confirms to you that this is going to happen at this time when you're anticipating it, okay? This is the power of my candle theory, my one candle theory. You've seen other videos on the one candle theory. When I started making the one candle theory, I saw it pop up around YouTube. This is what I was expecting, okay? And that's fine. But I felt like today it was time for me to expand on this and give you a whole model. This is a whole model because small ranges lead to large ones. Partner this with the use of red news, which I will teach separately, okay? I will teach that separately, okay? And partner it with this, and you know exactly when expansion is going to happen. Before the week even starts, you know which days are likely to expand because of the red news. Okay, red news tips its hand to you, but that is a topic for another time. For now, I want you to go into your charts and backtest all of this. Backtest the rules I gave you, okay? And backtest the fact that small candles lead to large candles. We take the range of the small candle and use them as targets, okay? This is my theory and the introduction to my theory. If you did enjoy this video, please do subscribe if you are new and drop a like. If you made it this far into the video, drop a comment saying small ranges equals large ranges, okay? I want to see how many of you actually made it this far and how valuable this information is. So if you did make it this far, let me know by commenting small ranges equals large ranges, okay? And I will like every single one of you in the comments. We'll do a little giveaway for those who comment that, okay? For those who make it to the end of my videos. I appreciate that, okay? We'll do a little video for everyone who comments. Little giveaway, sorry, for everyone who comments that. With that being said, check out my mentorship in the top, link in my description, if you want to learn more from me, okay? Drop a like, subscribe, turn on notifications. And with that being said, thank you as always for watching. I will catch you guys in the next video.